Looking for beyond ordinary investment opportunities? Global X ETFs is here to help with their suite of thematic, income, commodity, and digital asset funds. Explore the range at globalxetfs.com.au. And now, on with the show. How are you now? Broadcasting from the VFS studios at Milson's Point in Sydney. You are listening to the all-new BIP Show, Season 7, Episode 4. Thank you to Global X for all they've done. And a reminder that all of the financial information in this podcast is general in nature only. Speak to a professional advisor about your needs. Now, I note that this podcast is part of the sponsorship of Global X, which is great. It's not going to be one of those boring, stayed formatted ones where we just go through, here are some products. It's actually going through the bits and pieces of what's being seen thematically by one of the best in the business of Global X, which is good. So full caveat on that this is sort of how it works, and this is what happens. But it's actually, fortunately, I get to choose my sponsors. Fantastic. I do get to choose my sponsors. And I get to choose interesting people who have interesting things to say, just as well that you do, which is good. My name is James Whelan. I am the investment manager here at VFS Group. This episode is being recorded in Sydney. It is the 15th of February. Holy crap, Valentine's Day was yesterday. 2023 AD. This young man, I met him at ComSec, and from ComSec, then I met him at your ex-BlackRock and did some amazing work there. Made the big move to Global X, more interesting stuff, I assume, bit more innovation, whatever they've got. And from there, Global X, with the big moves that they've made in the market, huge leaps and bounds in not only putting their name out there, but also in the products they've got, which is cool. Ladies and gentlemen, Blair Hannon.
James, where do I go post that? I'm not sure. You've done it all for me. Look, thank you very much. Really appreciate it. We did. We met a long time ago back at CBA, didn't we?
Yeah, they were good. Hit it right off. Our eyes met across the Stacks bar downstairs, and it was love after that.
Yeah, call what you want.
Yeah, okay. Now, a note for everyone who's listening as well, that this podcast is going to come with notes. So Blair was good enough to send through a presentation, so he's got himself a slide deck here. We're going to be looking at it as we go here. Go to wheelandcapital.com, which is where my website is, which is where everything is stored. It'll be in the notes in the BIP Show tab. Go and hit it. It's not necessary to the listening of this one, but it will probably help you visualize some of the things that Blair's going to talk about, and talk about them he will. So look, Blair, let's start. Obviously, it's something that's very close to my heart, which is the commodity space. I'm very bullish on the commodity space.
Yeah.
Long term. Anyone, I think I said this last week with David Scutt, that anyone who doesn't have at least some part of a copper holding in your portfolio, talk to your advisor very, very strongly as to why that could be. And that there should be some sort of exposure to that. Generally speaking, commodities I'm bullish on, just with the world growth, as it will always continue to be, and with the demand on resources that we have.
Yeah, and we can dive into that in some detail as well, for sure.
But look, it's your show. Well, it's your party. So go ahead here. So where are we going to start on this one?
Look, I think what we do at Global X is probably, you mentioned BlackRock before. We're not really playing in that space, James. In that, what they do is vital to, if we're talking about ETFs as a general industry, investment management, iShares, Vanguard, really important as part of the infrastructure in terms of, for a lot of people getting access to low cost core, or however they want to build a portfolio. That they're certainly going to play a really key role in that. When I think about Global X, though, I'm coming from a very different angle in that we want to give people a sort of different choice, an alternative choice. And the idea here is, we kind of think of ourselves in three pillars. One of them is thematics, this is quasi a thematic. One of them is commodities, which is what we're going to do more of, but it sort of goes to a thematic. And the other one is income. So, we're going to dive here into more thematics. And I think the idea here on the commodity side, commodities can be sort of bucketed in a thematic in the same world. If you're talking about, you mentioned copper, for example. What is that big mega trend theme? What is that big thinking around what's going to happen next in copper? You can look at the day-to-day. That's probably more short-term. We're thinking much more long-term when it comes to this. So I think from our perspective, how does an investor invest in commodities? Obviously, you've got a huge range. You've got the precious metals and gold. We don't have to go into that detail today, but because we'll stick to some of the bulks and the industrials. But
Yeah, good.
you've got the sort of the energy-based ones. So again, if you think about thematics and talking about, and we'll talk about, one of them maybe being decarbonisation, that can somewhat encapsulate some of those in terms of how they're going to roll off, or uranium maybe picks up.
Yeah.
And then obviously the soft commodities. Again, there's probably not a huge amount of ways people can play that, and that's the step, isn't it? So like, how do you as an investor want to access commodities in a portfolio? Like which ways you want to do it? And there's obviously multiple ways.
Yeah.
But for most investors, I would say they're probably not going to buy the physical, and they're probably not going to buy futures.
The physical is difficult. Myself as an advisor, straight up, this sounds reverse. I've always found it difficult legitimately. I've always sort of had a bit of a bitch about the fact that it's very, very difficult to get access to commodities. There was another ETF provider that did have a commodity ETF that was here locally. They wound it up, much to my aggression. They wound the commodities ETF up about 10 minutes before we had the massive commodity super cycle, which we covered on this show, that people still don't believe happened. But it's always the way that it's going to be. It's very difficult. And the other way to get direct access to it, apart from that, is I've got to go to London. That can be a little bit hard to do. And it's sort of in an ETF structure, it's hard. It's hard, and it's clunky.
ETFs are probably one of the cleanest ways. And I think if you break it up into those buckets again, precious metals, you could go and buy a gold bar if you want, put it on your bed. Safety's not great. You're not going to go and buy a barrel of oil. You're not going to go and buy, the carry cost for that is just ridiculous. Copper, for example, do you really want to have a bunch of copper sitting in a warehouse? Unlikely. You want to sit in a warehouse somewhere. Yeah. So the other two choices are in a fund, an ETF, or through equities.
Yeah.
Are you buying the miners?
Then you leave it to the miners, yeah.
Yeah, so you leave it to the miners. And what does that come with? Well, that comes with, if you're buying individual companies, it comes with, idiosyncratic risk, it comes with management risk, it comes with, feasibility studies, it comes with
just general market, just ups and downs.
Markets, right? Right, like rain going into a pit. These sorts of things that are, if you carve it down to a certain degree at one company, you're going to get exposed. So if you want to buy a copper company, you can do that, and you will get, if you're right, get significant upside.
Yeah.
Or you can basket it across an ETF.
Blair, as sure as God wears sandals, if there is a way for a stock to stuff up digging things out of a hole, I will find it.
Okay, good. Okay. Yeah, good. So I think, direct metals can work in some cases. And I'm certainly not here to talk product, but it can work in precious metals in terms of holding it. Again, you can use it through an ETF or a fund or however you want to do it.
Yep.
Whereas probably some of the big bulks and industrial metals, it's unlikely. You're not going to go and dig some iron ore out of the ground and throw it in your backyard and go, one day I'm going to sell this. It's not likely going to work. So likely the benefits are through equities, and then you've got a choice. So you can either go single stock or multiple stock, or you can go with ETF, which just gives you a basket. Okay. That's about as simple as it gets.
Yep.
Okay. So then you're digging into the investment case. So the kind of the why of what this is. And I think what we said, we're going to focus on the decarbonisation.
Yeah. Let's get to the decarb, because that was cool. And this is a new one that you guys have got. So
we've got a range in this space, because what you got to think about is you can play any type of investment, and this is kind of an ESG style investment, but it's not ESG. It has a theme to it.
Yes.
You're playing a decarbonisation theme. ESG is all around taking companies out and negative screening, etc. There is obviously some positive sides to that, and I'm not discounting ESG as what it does and what its role is. But this is more around, if I see decarbonisation as a theme, how do I want to play that theme? And the way that we've sort of taken a bent on that is to say, look, there is a huge amount of infrastructure that needs to be built to move towards clean energy and clean technology.
Right.
And to do that,
there's no doubt that is the case. Yes.
That's inevitable.
Yeah.
It really is. It's going to happen at some point. So even if you're a believer or not in climate change, I'm not judging you on that, but this is happening. This is getting driven by governments, and that's going to drive massive amounts of change.
Yeah.
So one way to do that is through thinking about what metals or what materials are going to be a part of that program.
Yep.
So if we utilizing this deck as an example, so what we are calling,
so we're on 7.
Yeah. So what we're calling green metals, as an example, is what is going to play a role, or what metals are going to play a role in building things, infrastructure, obviously batteries. We won't go into detail on the lithium in this podcast, but building infrastructure certainly around things like solar, wind farms. This is where we're going to get a majority of what we're looking for.
Two of my absolute favorites.
Okay, so you get a situation where you're going to need lots of areas, like you're going to need rare earths, you're going to need lots of copper, you're going to need zinc, you're going to need platinum and palladium, the PGMs. So you're going to need all these materials. So is that inherently a good thing for the globe in mining this stuff? Probably not. But there's no what choice do you have if we want to drive towards a really low carbon output of energy?
We can have that conversation. It involves going nuclear, but okay.
And look, and we're not going down this.
Say that. Let's not go down that route.
It's interesting because we did recently bring out a uranium fund as well on the back of that, encapsulating what all this is.
Yeah.
And the point is, we're going to give investors choice. Like, we're not going to push a particular fund.
In my view, as an investor, it's funny, listeners, anyone who's paying attention, the conversation that Blair and I are having is almost identical to the conversation that we would be having anyway with regards to the ETF provider. This is not. This is the least staged podcast I think I've ever had, actually talking about the bits and pieces. This is how an actual advisor would break this down.
I prefer not to talk about products if I can. I'd rather talk about the idea.
Yeah, I want to talk about the ideas. Yeah, which is all I want to talk about as well. Let the ideas flow from that for myself. The green metals, the way that I see that wind farms and solar is sort of being a stopgap before there's an eventual move towards some of the bigger things that are actually playing, and that being nuclear or fusion.
Yeah,
so what happens has to happen. There is no alternative to that. These things actually have to take place, and they will continue to take place. Same as hydrogen. Anyway, I'll get out of your way.
So there's a concept we have, and it's not in this particular. There's an element of in this deck, but it's not in this deck, and we can give you this, James. You can put it on your website by all means. Called the S curve, and the S curve is around. It's the opposite of the business cycle. It's opposite of what we're seeing right now with inflation and interest rates. It's around technological adoption. And you can really think about a wind turbine or a solar array as part of that technological adoption. And we'll come back to that in a moment at the end of this presentation.
Yeah. I'm going to get out of your way. Keep it going.
Yeah. So to your point around like nuclear fission and these sorts of things, they are at the far left of an S curve because the technology is not ready yet. The adoption is not going to happen until the technology is ready. And then as that grows, you move into the mass market and it takes off. Now, from an investment lens, where do you want to play? You want to play in that just pre-mass market before it really takes off.
Correct.
So, look, this is a different lens because we're talking about commodities here, but the idea here is these particular metals, and lithium is in this bucket for sure.
Yep.
Battery technology we know is going to be really important around EVs. And again, we won't labour that point today.
Already is. That's a whole podcast on its own. And many people have already done that before.
Exactly.
I'm not reinventing any wheels here. Yeah.
No, it's kind of a done move. So the concept here, though, I think is a simple one. In that, and we're going to go down this path a little bit on copper, and I think this is slide 7. If we move to slide 8, good. Okay, so this is from the International Energy Agency, which is a great resource for anyone who wants to dive into this topic. They've got huge amounts of excellent content and research on the website.
So this is minerals used in clean energy technologies compared to other power generation sources.
Yeah, so I think the interesting thing here is, that what does copper do? Do you know what you
conducts electricity?
Conducts electricity.
The possible way that it can do.
Yeah, so it's probably one of our best chances. It's you could probably substitute aluminium, but it's not going to help that well. The conductivity is not as good, and from a cost point of view, copper's our best shot at that. It's been used for millennia on this type of
Correct. We've done this. Yep.
So the idea here though is, and this is really going back to basic economics around supply and demand. So copper is used across every single one of these types of infrastructure. It's used now in natural gas. It's used now in coal. It is also used in nuclear, solar, onshore and offshore wind. Because what does it do? It takes electricity and puts it back into the grid, and it's important.
Yep.
The interesting thing here is in the fact that it's used. The interesting thing here is the magnitude of how much more you need for clean technologies than what you do for traditional fossil fuel driven technologies.
Yep.
So you're talking between 3 to 4 to 5 times more in these type of technologies because of the output of electricity and the way that they're generated, rather than just one single standing, again, coal-fired power plant. Yep. And the same thing can be said for electric vehicles. You're talking about 3 to 4 times more copper due to having to move the electricity around a car than you would in a combustion engine.
Well, it was a show that we did a couple of years ago with Rob Rennie, head of commodities over at Westpac, who I mentioned that stat about there being you need 3 times as much copper in an EV as in an internal combustion engine. And he corrected me, as most people do. And he corrected me and said, actually, I'm not going to do his accent, but it's a beautiful Scottish accent. He said, it's actually more like 5 times, James.
Yeah.
Because you're not counting in charging stations and the electricity between charging stations to move stuff around. To do EV, it's actually 5 times as much per car than an internal combustion engine vehicle. The stats only someone like Rob could have, but like it blows your mind exactly how much copper is required to go into Elon Musk's magical dream of Tesla.
Yeah, and that's just one component of this whole regime change that we're seeing, this shift, because electric vehicles they're a big part. You know, that's a major move from an infrastructure perspective, and also from a change of mentality and consumer behavior perspective. This is about driving energy to your house. This is about the use case of, if we are going to get to net zero, where we're going to sit. To the point around it being inevitable at some point, this is what governments are doing. So if we look, I don't like to flick through decks, but
no, it's your presentation.
Yeah. So I think the idea here though is
so we've gone to 9. Just so everyone knows.
We have gone to 9. So where are we at? I think these visuals do help. So you know, for those listeners who want to follow along, we'll try to talk it through, but they do help. Is that, and this is probably slightly changed, and I think this is a point that we can make. A lot of the concepts here are long term. They are much more around 10-year plus investment mentality. It's not mutually exclusive. If you do like coal, and we're talking about coal on this particular slide here, that's fine if you think it's great on the short term. And it would have been a great trade the last couple of years, probably not the back end of last year, but it would have been a great trade.
Yeah, you
can have both. The idea here is that coal expectation around revenue is going to degrade over the next 20 years. As governments, driven by the population, drive towards renewable energy. And where are the benefits of that? Pretty obviously, the green metals.
Mm-hmm.
So they're going to benefit out of that. And again, so we're sort of stacking these slides up to say, and to build, like, this is sort of the building investment case up to say, okay, this is what's going to happen.
Yep.
And that's great. What does that mean from an investment point of view, though? It means that you need to weigh up if you're going to make money out of that. How do you invest alongside of it? So this is where the idea of, you can buy a single stock, you can buy an ETF that has a basket of companies that are investing in that space. So I just want to read at that point.
Yep.
So as we move through, this is where the demand and supply dynamic works. And to simplify this, how this works, it's basically a very reasonably simple triangle. Demand's on one side, supply's on one side, and then what's in the middle is essentially price. So if there's an imbalance, and we're on slide 10 here, if there's an imbalance, what's going to have an impact on that? If there's a demand imbalance and there's a lack of supply, you're going to see higher prices.
Yep.
Obviously on the flip side, if there's much more supply than demand, you're going to see lower prices. This is not scientific.
Yeah.
I'm not smart enough for that.
Yeah.
But this is just to say, like, you look at these metals and the expectation around what the demand for these metals are and how much supply we would have, and this is in particular in 2040, we're just not going to meet. We're not going to meet the demand.
Yeah. So what have we got? Actually, go through some numbers here specifically that we're looking at. So
these are again key to things like electric vehicles, wind turbines, and solar arrays.
Yeah.
Okay. So again, these are the metals. Again, we're building the case here.
Yeah.
These are the metals that you need. And again, this is coming from the IEA, to meet the demand of, if we do get towards those, and look, what you'll find a lot of the electric vehicle stats are coming from car companies and electric vehicle companies, which are slightly biased, as you would expect. But the numbers are pretty amazing in terms of where the expectations are. But it's an absolute step change. So lithium's an interesting one, obviously, because we know that it probably didn't have a huge use case. It was used, but it had never, like, compared to what a battery in a car is compared to a battery in a phone.
Yeah.
It's a massive difference in terms of size.
Yeah.
Where copper's been used for millennia. Like, it's not like it's a new deal. It is Dr. Copper for a reason.
Well, my favorite's always been nickel. Ever since my first day in broking, I think I was there the first day that I can't remember what the nickel producer was, Havilah or whoever they were, but they came and presented in that day, and I was just like, well, there's just not enough nickel.
Yeah.
And this is in 2005. going and just looking at what the nickel was. So run us through here. Well, you've got what's the orange bar, what's the blue bar? That's
it's basically the expectation of where the demand will be compared to where the potential supply will be.
Yep.
So we're really seeing it's a pretty significant gap in many spaces.
Yeah. So there's 7. What is the 7?
There's particularly 7 here. And
growth in multiples relative to 2020. Okay, so relative to 2020 by 2040. So the 2040 projection is that there's going to be a 7 times requirement if everything just sort of goes as it is now. But if the IEA Sustainable Development Scenario plays out by 2040, it's actually a 19 times increase in the demand for nickel than the 2020 spot.
That's right.
Okay.
Again,
that's pretty significant. Okay.
Yeah, so basically supply and demand. So I want to come back to this S curve now. So we've sort of done supply and demand.
Yeah.
And I'll come back to it again.
I can see you're winding up for something good here.
Well, I don't want.
No, you are.
I don't want. This is the S curve articulated for the use of renewables as a share of global power mix.
Right. This is slide 11, guys.
You're much better at that than me.
Go
on. So where do we sit? We're sort of just above 30% of
the renewables share of global power mix. This is the beautiful S curve. Yes. Okay.
So Australia are about 30 as well.
Yep.
We'll use roundabout numbers here.
Hi, South Australia, if you're listening as well.
Yes, we know what happened down there with the battery. But if we want to get anywhere near net zero by 2050, is this big broad goal.
Yeah.
This is where the adoption. This is the S curve.
Yep.
The adoption kicks in, and we really move strongly towards that mass market uptake.
Yep.
And I think there's been a couple of things here that I'm sure your listeners are well across. Energy independence is now so front of mind, especially for the areas that we're very beneficial, as we know. We've got coal, we've got natural gas, probably too much of it, and we export more than we have, and obviously that's putting pressure on our prices as well.
Right.
What does Europe have? Essentially nothing. What does a bulk of Asia have? Not a huge amount. So what do they want to do? They want to drive independence. They had the pressure out of Russia that they didn't have. They didn't have independence, and that obviously fell apart. What can you do in your own backyard? You can build, it's not perfect for this, but you can obviously build a wind turbine, and you can build solar array, and you can get energy independence.
Some sort of independence to see that. At least be a fair chunk off the grid. Yep.
Yeah, so a chunk. And you're never going to be completely off the grid, sure. Well, certainly in the next couple of years. But so the European energy crisis actually sped up this curve of the adoption. And what we saw, and I think this is the kicker. I didn't wind up for this, but this is the kicker. COP27 last year, one of the stats that came out of that was the expectation is from COP27 that the spend that's going to be needed to build the infrastructure to move towards the 2030 goal of sort of 60, a bit over 60%, is between $4 and $6 trillion a year.
Okay.
And where does that go? In the infrastructure build, in the commodity space, in that area. So the demand's there. Is the supply there? We know it's not probably there.
We know it's not there. Yeah, but the spend is absolutely there to get to.
The spend is there.
Yeah. So by 2030, we're talking about 61% is going to be renewable share of the global power.
Yes, we're nearly doubling in that 10-year span.
Yeah, and that's only 2030. That's
so the acceleration
my
is
kids
really
will
quick.
Just be maybe thinking about finishing high school.
Yeah, so the acceleration is really quick, and that's the whole point of the S curve. That's when the acceleration kicks in.
Yeah.
In that phase of that really the big market move. So what we see is, and we'll move on to slide 11 as an example of copper.
Yeah,
the
12
supply,
here.
Yes,
So
12 here. So the supply and demand of copper at the moment is finally balanced. Its use case, it essentially has been telecommunications, building homes, building electricity, like a lot of those sort of areas that you commonly see as copper from an economic cycle point of view. If the expectation is that we do need to build and move from 30%, so essentially double where we're at, where does that copper come from? So I think there's really good two cases in point here, and you would know this, James. I'm sure you talked about it. BHP, what do they do to try to firm up their copper supply?
To what, sorry?
BHP, what do they just do to firm up their copper supply, like in terms of their own business? They just went out
and they bought
Oz Minerals.
Yeah. Oh, I thought that was a trick question.
It's not a trick question.
Okay, yeah.
But
they just bought a company that does a lot of that stuff.
They're looking forward and playing this out now.
Okay.
Rio's another one. I just do it close at home. They have a large copper mine up in Mongolia. What do? They just went and bought out their partner in Canadian listed Turquoise Hill.
Right.
To do what? To get access to more copper. So these companies on the ground are seeing this. So Mike Henry, the CEO of BHP, so the back end of last year said, there's a potential that copper is in supply deficit by the end of this decade because of this.
Yep.
And what does that mean? What happens if there's supply deficit?
Price goes up. Yeah.
So that's how you make money out of the investment side of it. So if you're a believer in this, great. If you like ESG, great. If you don't, great. Doesn't matter, because the idea is you're trying to figure out the investment case.
Yeah.
This is the basic investment case of all styles of sort of investing, is think about the supply and demand.
Yeah. Where's there a shortage? Benefit, gain. Yep. Go on.
Yeah. So look, I think we can continue to go through the whole deck. I don't know how much time you want to spend on this. I think there's some interesting, like a bunch of interesting ideas here. And I think, by all means, feel this as I can flick through this deck. It's just bulk full of information. One of I think the short-term drivers on copper that everyone's watching is the China reopening trade.
Yeah, and I wanted to talk about this a little bit about this sort of on air and then off air as well. So let's go into the China reopening trade about what's actually being checked here.
So the idea for us here is we see China sort of being, as it says here, net short copper in general. But this is much more on that traditional and economic use of copper driving growth of an economy. So if you think GDP growth is going to come back in China, which the market's certainly starting to tend towards,
it's been tweaked up.
You would expect to see short-term gains in copper prices on the back of China. It has slightly tipped off recently. As we're saying, we had a really strong back end of last year for copper, but it's slightly tipped off.
Yep.
But the thesis what we just ran through is much more around the long term. And when we think about thematics, as you would expect, what are we thinking about? It's much more in the long term.
Yeah, it's sticking in your portfolio. It's definitely, if for clients that where it's their super fund, it's got to have a part of their super fund for me, for my clients, and the advice that I give, because it's your super fund. This will be part of your retirement. This will be part of what happens at the end.
Yeah, look, I won't judge in terms of who wants to put it in where, but
no, that's me. That's me saying that. Okay. I'm allowed to say that sort of stuff.
Yeah, what we generally see a lot of investors utilize in this space is in the sort of core / satellite. These are sort of the satellites as a role in a portfolio.
Yeah. Again,
how they want to use that is that certainly up to them. But going back to this point, so China, again, they're driving heavily towards clean energy, and they're driving heavily towards electric vehicles. You'd be surprised, but they're kind of at the forefront of this shift. But they also are moving from obviously developed market to emerging or developed market to developing to a developed market.
Yeah.
And what does that take? It takes a bunch of copper. So the reopening trade is more, I probably would think, a more short-term mover of the copper price over the broader theme that we just mentioned as a long-term.
Yeah.
I don't know. Do you have a view? Like, I'd love to hear your view.
No, that's exactly spot on with the way that I'm going. If anything, the reopening of China really does express to exactly how much they can actually move markets and how much they can actually get things done. The direction that they're going to take will exacerbate anyone that has ever said, okay, China will be using this and demanding this and actually going through this. Electrifying the world, China will be a part of that. Doesn't matter how much they produce through coal or even through nuclear, they still need to transfer power from one place to another. There's no doubt about that. It's actually that it's the best way that we have of conducting electricity. There's no other way.
No.
So China's reopening and everything is all about the actual conduction of electricity, shifting things from one power plant to where people actually need it, as they move to more of an actual consumer economy, people consuming things, people using TVs, using toasters, all of these things that people consume from being that manufacturing economy, they will continue to use and need as much of this stuff as they possibly can. And as they move to an EV economy as well, which they're very much at the forefront. I hate to say it, but they're at the forefront of doing that as well.
They are. They really are. So look, I don't know if we want to keep on continuing going through this whole presentation. I think it's certainly there for
inventories. Inventories is interesting. So if you want to close it up on inventories, and then we can
we can wrap it up. Okay. And I think there's a couple more slides, and it's more around, hey, look, it's difficult to pick particular commodities each year.
Go for it.
But we'll do inventories. Inventories, So for those of you who are keen watchers, and you can never look at this yourself, this is not anything secret. There's a couple of areas you can track, and that's one of them is COMEX, the biggest one probably being the LME. And what we're seeing though is copper inventories at these big sort of warehouses is very, very low. And what does that mean is that any sharp moves or any big sort of orders have a massive impact on price. So again, the expectation is that if you look at this chart, you've seen that back in 2004 on
page 15.
Page 15. Yep. Again, you're doing much better than me.
That's okay.
But we are sort of at that lower end of the inventories. It's starting to run out in terms of what it is. And so this again has an impact on, we keep saying it over and over, but supply and demand. And more so on the supply, because if supply is low and demand's high, they can't actually access it in a very short period of time. And there's a really interesting piece, I'll sort of try to finish up on this for you, from Bloomberg the other day. It was all around the fact that, copper might be the case where it actually stops the electrification program change, because there's not enough out there. So it actually slows things up, and there is then figuring out some substitutions and ways around it.
That's interesting.
It was a high level point, but it is
a high level point. Yeah, and it is something to think about too. Because
the problem is with supply, you can't just flick a switch and go, hey, we've got a new mine now. Let's just pull some copper out of the ground. There's problems. Where does most of the copper in the world? It's sitting down in South America. Certainly here, but BHP's biggest mine is in South America, Escondida. There's some issues around governments there wanting more, and from a royalty point of view, there's issues around strikes. There's some problems that, again, short term, but have long term effects on supply. So it's a nice area to keenly watch, I think, for investors. And I think most investors in Australia are pretty savvy when it comes to commodities. We've got two of the biggest bulk commodities in the world.
Yeah, we do understand how stuff comes out of the ground and how it's important and what goes after that.
Yeah. So look, I think wrapping it up. I appreciate that. Love to be on the pod, and I think we sort of finish up this presentation with a bit of an idea of picking commodities is again difficult. So for many investors, it might be finding a basket of commodities. Again, ETF can help with that. It might be liking one particular commodity. Again, whatever you work on, how much research you want to do, how much you want to listen to James Whelan, that's up to you. But I don't understand anyone who does. It's never easy. So just think about how you want to actually do that in type of investment. ETF may suit, it may not. But this is just really this idea, this periodic table of commodities on page page 16 is really to show you that picking one commodity each year is not an easy task for anyone.
Yeah, that's good.
It's a really nice little chart and summed up quite nicely.
Just shows you the performance. Look, that's about it. Look, no more product chat that's on there. It's been good to talk to you about what's required. I like banging this drum. I can't bang this drum anymore about exactly what's required for it, but it's good to have it in some real detail there, and also the spread of things that will be needed and will be required for us to be able to continue on as a species, as just a population of people who are just moving forward. Or, as you said, we just don't, which is also going to be an interesting situation that happens. And then a whole bunch of other stuff just don't as well.
And the good part about all this, we didn't mention AI once.
Oh. There's something I wanted to bring up. No, I'm not going to do AI. Come back on and we'll talk about artificial intelligence at some stage. But I've had this conversation a lot lately. It's a clanger. Well, look, eventually I could just do this podcast through AI, and it just generates a podcast through AI. But then I wouldn't be able to sit here and just say my hilarious, witty things that I say. Look, that's it. I've got nothing else to say, ladies and gentlemen. Thank you so much, Blair Hannon, Global X ETFs, for joining us today and telling us everything that you've just told us.
Appreciate it, James.
All right. Thanks very much, guys. You can find us on iTunes at The BIP Show or wherever you get your podcasts. We're on Twitter at @the_BIP_show, and we're on Facebook too. Just search for The BIP Show. I've got a website. Just Google Whelan Capital. It's got all of the links and all of the documents that you want to know. Individually, I am at James Whelan42 on Twitter. The show is produced by whoever I could find on the day. Thank you very much. We'll catch you next time. This episode might be over, but your ETF investing journey with Global X is only just beginning. The expert team at Global X ETFs is ready to support your goals with their wide suite of ETFs. For the latest updates, follow Global X ETFs on LinkedIn and Twitter at Global X ETFs Australia.